2015. Who can forget the Jim Rogers Masterclass, parts 1 and 2? Jim was one of the people that inspired my journey into macro. And this was a benchmark interview for us at the time. You see, Jim wasn't that involved in long-form financial media, and we got the full story. He's a total fucking legend, and I think you will learn incredible amounts from this amazing benchmark interview.
So when we started our Masterclass series, the idea was to get a group of really successful investors and really dig into the process. And they don't come much more successful than Jim Rogers. Now, I know you're going to be humble about this, but it's a great thrill for me to get the chance to sit and talk to you and really kind of dive in to the things that have made you a successful investor and some of the lessons you've learned along the way. So there's a whole generation of guys in finance younger than me who perhaps don't know your backstory because they've come into the business when you were Jim Rogers today rather than Jim Rogers back then. Perhaps we could kind of take the viewers through that story because it's a fascinating one.
Well, I'm not so sure it's fascinating.
Maybe not to you.
I grew up in a small town in Alabama. It was so small my phone number was 5 back in those days. It's called Demopolis, Alabama. Then I went off to Yale. I got a scholarship to Yale. Quite to my surprise and by accident, but I had a wonderful time in New Haven. And then I got another scholarship to Oxford. I had a wonderful time at Oxford. And then I had to go into the United States Army. They had the draft in those days. So I wound up spending a couple of years in the Army. And then I went to Wall Street. Along the way, when I was at Yale, I was a confused young man. I was going to go to medical school and business school and law school, etc. I got accepted in various places. But then the summer after I graduated from Yale, I stumbled into a job on Wall Street, a summer job on Wall Street. I knew nothing about Wall Street. I knew it was in New York. I knew something bad had happened in 1929, but I didn't know there was a difference in stocks and bonds. I thought they were the same thing. I knew absolutely nothing about investing. And yet, I got there for the summer job and had such a wonderful, I fell in love. I could not believe they were going to pay me to know about the world and look at the future and figure out the future. And not only would they pay me, they'd pay me a lot of money if I did it well.
But what was it about that so captivated you? Was it the
I don't know. That's
people,
what I was always keen to know about. That's what I was always reading about the world. I had never traveled very much, but I'd always been fascinated with the outside world, the whole world, everywhere, Chile, China, everything. I was keen to know about it all. Had never been outside the country other than Canada, and I was very keen to know all that. I don't know why, but that's what I used to read about when I had time and think about. My gosh, they'd pay me. It would pay me a lot of money if I did it well, to read about the world, to know where Chile was, to know where China was, to know what was going on in the world, and to predict the future, if you will. It was fascinating. I did have the scholarship to Oxford, so I went and had a great time. But as soon as I came back, I didn't go to law school or business school or medical school. I went straight to Wall Street as soon as I could.
And once you get to Wall Street, and for a lot of people, that transition from this ideal of what Wall Street is and what it represents, what it stands for, you were kind of going in with an open slate, more or less. But once you got there, what were your impressions once you get inside the kind of the belly of the beast?
Well, it was as exciting as I thought. I loved what I was doing. I loved doing research. I loved trying to figure out what was going on in the world. The problem with Wall Street is you have to know everything. You got to know the whole world. it's like a three-dimensional puzzle, except they change the puzzles every day. Well, there's a fourth dimension, it's time, because every day you come in, and it's a new day, and the puzzle and the pieces in the puzzle have all been moved around, and everybody in the world, or millions of people, hundreds of millions of people, are trying to figure out the same puzzle at the same time. And so there is no such thing as doing enough work. You're constantly always having to do more work to stay on top of things. But I mean, I couldn't imagine anything better. I was sorry the market closed on weekends. I wondered what people did when the market was closed, because I was always reading and looking for other things to know about and to do in the world. I remember once, this is 1969, mind you, and I started talking to some guys about buying the Danish Krona. I mean, they looked at me like, what the hell are you doing? What? Buying the Danish Krona, what is it? How do you do it? Why would you do it? And yet, to me, that sort of thing was just as exciting and thrilling as it could be. And there were reasons to buy the Danish Krona, I thought, anyway. But I'm not sure they knew where Denmark was or what the Danish Krona was. But to me, it was just, it all fit together. Stocks, commodities, bonds, currencies, everything. It was all.
But this was a really different Wall Street, because now there isn't really an informational edge anymore. It's really an edge in your thought process and how quickly you can put that puzzle together. But back then, there weren't many guys like you that would get involved and would take the trouble to go that extra step and learn about some of these kind of esoteric markets like Denmark, for example.
Well, now I know it was certainly unique. There's no question. Most investors in America, anywhere, but in America especially, invested in shares listed on the New York Stock Exchange, maybe the American Stock Exchange, maybe over the counter, if they were really venturesome. And yet here we were doing it all and having a wonderful time doing it all. So there was a certain, in America, there were very few people who were doing what I was doing, what we were doing. Now, obviously, people in Denmark were investing in Denmark, I hope. But even then, there weren't that many people investing in anything worldwide, not like today, where everybody seems to know all about everything. I remember once I was at a party, this is the 70s, and a bunch of yuppies. We were all yuppies. We were talking about, where you went to school, where do you work, that kind of stuff. And a lady said to me, well, where do you work? And I said, oh, I work on Wall Street. I'm in the financial markets. And she said, oh my gosh, things must be terrible. Because they were, for investing, most people in the 70s. And I said, no, I'm short. And the woman looked at me like, you goddamn fool, I can see you're short. What does that have to do with anything? No concept of what selling short was in those days. Yeah. Absolutely no concept. It was just unknown. Most things about the financial world were unknown to most people. It's not like now where everybody's dying to go to Wall Street as soon as they can. They're starting dorm rooms starting hedge funds in their dorm rooms, etc. But it was a lot of fun. I sure enjoyed every minute of it, and as I say, I could hardly wait to get to work.
But where did you get your information from? Because back then we didn't have Google. You couldn't just look at your phone and find out. How did you? Because global reporting, there wasn't so much of that back then. You must have had to really kind of go places to find out this stuff.
Well, Grant, as I look back, yes, you're right. Little did I know at the time what the world would come to be. Like, you didn't have Google. Gosh, but I did read newspapers from, I think, 5 different countries every day. Was constantly reading and looking for information. Financial Times, it's still around. The Economies is still around. But I'm not quite sure how or why, but we were reading lots of stuff. If we needed to know something, we could certainly go to London if we needed to figure out something out. As I say, this is what I loved. I didn't know much about the NFL in those days, but I didn't care about the NFL. I was having so much fun trying to figure out who was doing what to whom and what was going to happen next in the world. But as I say, even when I was a kid, I mean, I didn't know that was my passion when I was young. I didn't know things like that at all. But looking back on it, that's what I love. That's what I tried to spend my time doing, whatever my sources of information I had. And here they were paying me a lot of money.
But I remember reading in Investment Biker when you were talking about you and your dad going into business together when you were, I don't know, 10, 11, 5?
6. Well, let's
6.
see.
Okay.
No. 6 years old. I borrowed $100 from my father.
Well, there are not many 6-year-olds that want to borrow $100 back then.
I know.
That's a lot of money.
$100 is a lot of money,
Right.
especially back in the backwoods of Alabama.
Sure.
Especially when you're 6 in 1948. But I borrowed $100 and bought a machine to cook peanuts, to parch peanuts, and had this. I mean, this is a small town, mind you, but I had the concession at the sporting events. Not as though there were a lot of sporting events. There was a men's softball league and a little league and things like that. And I had all these little boys working for me. I mean, we'd all go to jail now, I assure you, for child labor laws or something. But I had the neighborhood boys and my little brothers all working for me, and we'd cook the peanuts, take them to the games. We would go to the ice house. They had an ice house in those days, and we would buy ice and take it to the baseball field and put it in this big cooler, put the Coca-Colas and the soft drinks in the cooler, and off we went selling. And I remember we were selling our peanuts at 10 cents a bag, which was, we raised the price. The local price was 5 cents a bag, but I didn't have any competition, so I raised the price to 10 cents, and it worked.
They paid it.
We would buy big 100-pound bags of peanuts from the wholesaler. I guess they delivered to my house. And we would cook the peanuts, put them in paper sacks, little ones that we bought from the wholesaler too. And off we went and we sold them. Anyway, eventually I paid the $100 back, and I had $100 in the bank. So big time. This must be about 1952 or 53. And this is when my father took me we met a local farmer, and we bought calves because we were going to turn the baby cows over to the farmer. He would feed them, raise them, and then we were going to sell them and get rich. Unfortunately, we didn't get rich. Something happened, and I never quite figured out what happened because I knew we didn't get our money back. We didn't have any money. And years later, I was on Wall Street, investing in everything, and I thought about those cows. And I went back and looked in something. Probably I looked in the Commodity Research Yearbook. There's something called the CRB, Commodity Research Yearbook they publish. So I went and looked, and I had them for many years. I looked back to see what happened to cows. And then I realized what happened. In the Korean War, price of all commodities went through the roof, as they usually do when there's a war. And so I see what happened. And my father and I bought these calves at the top, turned them over to the farmer to raise, and it was a sure thing. There's no way you couldn't get rich, because if you bought these little baby cows, you fed them, you grew them up, and then you'd sell them. Well, except for the fact that we didn't know, I guess my father didn't know, that there was a war going on, commodity prices were booming, and that when the war ended, the prices were probably going to go down. I certainly didn't know that. But I did look back and I figured out why I lost my $100.
But that's a really important point. I mean, it's a great anecdote, but it's such an important point because today it seems as though everything is getting done to avoid people losing their money when the market falls. And you learned a lesson there that clearly stood you in tremendous stead for your future as an investor. How does this world tally with that world where the lessons just, you can't learn them anymore?
Well, it would certainly be great if there was somebody who would protect me from losses.
Well, yeah.
Right. I mean, I wish there was somebody I knew who I could call up, but you're right. Right now, you're not allowed to lose money. You're not supposed to lose money. If you do lose money, there's somebody supposed to ride to your rescue and bail you out. But no, there was nobody to bail me out. I lost $100. And again, that was big money in the backwoods of Alabama back in those days. But now you see what's happening, not just in the U.S., but in Europe, the Western world, that when people get into trouble, somebody is supposed to bail them out, whether it's the IMF or the local government or whoever it is, whatever it is. And I'm afraid that we're all going to have to learn the way I learned about those cows, the hard way. At some point,
yeah, I think
the hard way. You raise a good point, Grant, because I've certainly learned more from my failures than I have from my successes. That's for sure. But it is difficult these days to have failures for many people. But my failures have always taught me more. And it's too bad that life has to be that way. Most of us don't learn something when we get it right. But we do learn something when we get it wrong.
I interviewed Steve Diggle a little while ago, and he said the same thing. He said, people have this propensity when good things happen to them, they tend to blame it on themselves, and when bad things happen, they blame it on outside agencies and bad luck.
Well, yeah, I learned early on that there was nobody to blame.
Right.
Except you.
Right.
And I'd like to blame it all on you.
Well,
but other than you, there's never been anybody to blame on things. I know that when I look back on my mistakes, and I'm sure it was somebody else's fault, I just couldn't figure out who it was except me. I remember one of my greatest failures early in my career. I took all my money and bought puts. I didn't have much money, but I bought as many puts as I could because I thought that the stock market was going to go down. Now, even puts and calls in those days, there were like two brokers of two firms that dealt in puts and calls. Most people had no clue what puts and calls were, but I had figured it out early in my career, and I bought puts, all my money on puts. And lo and behold, 4 months later, the market had collapsed. It was the worst collapse in 30 or 40 years. And people around me were going broke and bankrupt, and here I tripled my money in 4 months. I said, wow, this is easy. I'm going to be the next Bernard Baruch. Where are you, Bernard? I'm going to show you. So the day the market hit bottom, I sold my puts, reversed my position. That made it look even easier because then the market had a big rally because I knew it was going to have a rally, and it did. So I took all of my money after 2 months of the market rallying, and I sold short. Well, 2 months later, I was bankrupt because when you sell short, you got to have staying, but you got a margin clerk. Margin clerk doesn't care. Mr. Rogers, I don't care. You just got to put up more money. And I didn't have any more money, so I lost everything. And I sold 6 companies short. Every one of those stocks went bankrupt. Those companies went bankrupt within 2 years, but I lost everything first because I didn't know about markets. I didn't know how. I thought everybody knew what I knew. I didn't know that there were a lot of people who didn't know these companies were going to go bankrupt, and the market was rallying off a very low bottom, which I now know about, and yet I lost everything, even though I was right.
Well, that's a fascinating point because what we've seen gradually creep up on us, and it's become magnified since '08, is the fact that the smart guys are generally early because by definition they're ahead of the crowd. And it used to be that if you were early, you could generally find a way of staying in the game until you were right. And the really good traders knew how to get a position on at the right size so they could stay in it, and then they press once they started getting right. And what seems to have happened since '08, I guess, is that the influence of central banks has meant the smart guys have to find a way of staying in the game for possibly an infinite number of days. We just don't know anymore.
Well, you're certainly right about that. What central banks have been doing in the past few years is unprecedented in world history as far as I can read and figure out. Yes, no matter how much you know about, the more you know, in fact, maybe the worse off you are these days because there are these guys down in capitals just printing money, and they don't care. They don't care that printing money historically has been bad. They don't care that interest rates are in levels where they've never been in history. They don't seem to know or care what's going on. But that's the beauty of the markets. They're always changing. I told you before, it's a three-dimensional puzzle, and they're changing the pieces every day. And time is the fourth dimension. It's a fascinating way to spend your time, but it's sure not easy. I wish they'd make it easy.
Yeah, wouldn't that be great?
Guys are telling me all the time, I said, boy, it used to be so easy in the old days. Grant, it was never easy for me. These guys I think they are remembering things in a bad way, because there was always something going wrong, something changing, something difficult and tough to make money. But somehow or another, I've still survived.
Well, I have a feeling we'll come back to the central banks soon, because they kind of invade every single part of these markets these days. But just to get back to your story, so there you are on Wall Street, you're figuring out this great game and really enjoying being in the thick of it. How do you then plot your way from working in a research department on Wall Street? What's the next stage for you? What are you looking to do at that point?
Well, I was working at a firm. We had a small hedge fund at the firm, and we had to spin off because some regulation changed in Washington. So we had to become an independent hedge fund. There weren't many hedge funds in those days.
I was going to say,
you could count them. There were none. But we became an independent hedge fund. Thank goodness. Looking back on it, thank goodness. And off we went. But let's see, A.W. Jones had his first hedge fund that we know about, 1948. Well, this is 1970 or so, and there weren't many. Jerry Fine, Mike Steinhardt, A.W. Jones still. There weren't many hedge funds, but we spun off because my partner and I both loved the world, investing all over the world. Selling short to me was just part of one of the tools. There were many tools. Puts and calls were one of the tools. And international currencies were part of it. Bonds were part of it. I used to read the commodity page every day. And in those days, there was one page in the Wall Street Journal towards the back about commodities. I didn't know anybody else who read it except me. I mean, obviously somebody was reading it besides me. I once went to see later on, many years later, I went to see a friend of mine, a guy I'd gone to college with, was head of the Wall Street Journal. And I went to him and I said, Paul, I would like to license the Dow Jones Commodity Index because I want to start a commodity index fund. And he said, well, Jim, we don't have a commodity index. So I got out the Wall Street Journal, turned to the commodity page, and I showed him, what's this? He said, you're right, what's this? So he called in some of his minions and started asking him about the Dow Jones Commodity Index. He doesn't have the Wall Street Journal. He was a smart guy, knowledgeable guy, had worked his way to the top. So I guess I was the only one reading the commodity page in those days. I still don't know why, Grant, but I somehow realized very early in the very beginning that it all fit together. You had to know it all. And if you did know it all, you could find a lot of opportunities which other people didn't know about. Today, you said something about Google before. I mean, you can go on Google and find out about everything in a few minutes if you want to, if you're diligent. Today, I mean, gosh, now they have all markets are on the computers. Do you remember the pink sheets?
Yeah, I do.
You know what pink sheets are?
Yeah, I do.
You know, there was a guy who every day would come around to your office and deliver these pieces of paper that were pink. That's why they were called the pink sheets, that had the prices and the market makers in all the stocks, over-the-counter stocks, which is now NASDAQ. But gosh, the world has changed dramatically in those days. And I wonder what some of those old guys back in those days would think.
Well, they wouldn't recognize it, that's for sure. Was there one, so back at that time, you're in this hedge fund, you're in a very small group of guys who have the luxury of being able to do all the things that you guys can do. Was there a moment, was there a trade, was there an inflection point where something happened that kind of kicked this thing onto a new level?
Well, when we spun off, We had $12 million. And by the way, none of the other hedge funds invested internationally in those days. But we spun off with $12 million, and within a year or so, we were really suffering badly. I went to my Yale reunion, my 10th Yale reunion, so it would have been 1974. And I figured, well, I'm going to have to go there and say that I'm the first one to go broke, because I don't know what was. Oh, the market in 1974, the markets collapsed. That's right, and we were getting it wrong, partly because we were shorting stocks like Avon, what came to be known as the Nifty 50. There were 50 stocks that J.P. Morgan J.P. Morgan. It wasn't, and they said they'll never go down. These stocks will never go down, and no matter what, they bought more of. I know the guy who did it. He went to Cambridge, as a matter of fact. He went to Harvard and Cambridge.
Well, you can't trust those Cambridge guys.
I know. He was head of our Harvard guys. He was head of the research department, and they would buy no matter what. No matter what, every penny they got, they put into Xerox and Kodak and Avon and all those stocks. And we were shorting those stocks, and they never went down. We went down instead. So I thought at my 10th reunion, I'd be the first one to go broke. But as you know, eventually, later, we had the staying power somehow at that point. So we stuck with it, and by the end of '74, everything collapsed. You know, Avon went to 20 from 150 or something. So that, if anything, was the inflection point. That's when we came. Now that you ask a question, these are things I haven't thought about. We came through 1974 with flying colors. We did extremely well. And I remember in 1975, the Wall Street Journal came and did a story about us. Because here were these guys, what do they know? And yet, J.P. Morgan had lost a fortune buying all that stuff. And here were these guys making money. They made money all through the 70s, and they continued to make money. So they came and did a story on the front page of the Wall Street Journal. And my picture, I called my mother and I said, Mother, to Alabama, would you please get a copy of the Wall Street Journal?
Now, was the number still 5 at this time?
No, but then we had dial phones. Now there were dials. I was one of the last 10 cities in the country to get dials, places to get dials. And I said, Mother, please get the Wall Street Journal tomorrow. And she said, well, you can't get it. It comes a day late to here. I said, okay, get it a day late. So I called her a day late and said, well, what'd you think? She said, you mean because your picture was on the front? I said, well, let's start there. And she said, well, not many people read that newspaper. I said, Mother, it's the second largest newspaper in the country. Not down here, it's not. Nobody reads that newspaper down here. So those were different times, different days. Now you just turn on your computer and get to Wall Street.
But were you evil short sellers back then? Because nowadays, if you're a guy who makes money being short, you're evil. I mean, the Chinese are now threatening to actually arrest people for short selling. And right through 08, 09, there were guys who had been short for 2 or 3 years because they'd seen this coming and were suffering an awful lot of pain. Suddenly, because everyone else is losing money, they're making money. They are evil short sellers. Were you viewed the same way back then, or was it slightly different?
Well, it was not quite as well known that we were evil short sellers. But I look back. Richard Nixon did not think this. He thought this was un-American, whatever it was. Dwight Eisenhower didn't know it could be done. He didn't know there was such a thing as short selling. It was not that well known, so it didn't get well enough known to be evil short sellers. Some people thought it should be outlawed when they heard about it. But if you could sit down with somebody in a rational way, you can demonstrate pretty easily, I think, that short selling is good for markets.
Yeah, I agree.
You want short sellers in markets. Even the people who lose money, they lose less because the short sellers have to come in and buy. Yes, I know, but it's something to this day, as you point out. The Chinese, and now somebody's trying to blame their problems on short sellers. Well, the statistics are, short selling in the Chinese market is about less than 1% of the market. So it's easy to find scapegoats and look for scapegoats. Everybody likes to find scapegoats when things go wrong. Foreigners, always blame the foreigners. Evil short sellers, evil financiers. There's always somebody doing something wrong if you're losing money.
So you've made this money from short selling, which is, in my experience, it's the most satisfying profit you can make, because you're essentially saying, I was right and everybody else was wrong. It's a good feeling to do the thinking, get it right in the face of everybody saying this guy's an idiot, and then you prove to be right. But now we're in the middle of the 70s and inflation is starting to go crazy, right? How do you deal with that environment? Because again, there's a whole generation of people in this business that have no concept of inflation in the true sense of the word. What were those times like?
Well, they also have no concept that bonds can go down.
Right.
You know, but we did short bonds at times. We actually shorted gold at one time, now that I think about it. But we made a lot of money in oil. Is it causing it? The price of oil went up a lot, which is inflation, which leads to inflation. We were long oil, not because we said inflation is coming. We were long oil because of the fundamentals of oil. They went through the roof, which meant inflation went through the roof, which meant interest rates went through the roof. All of those things we participated in. Shorting bonds, long oil. I mean, it all fits together. And somehow or another, all of those things we participated in on the right side.
But how did it feel to be in that? Because I'm fascinated by that decade. To me, is particularly when you contrast it with today, it's an incredibly interesting time, and it should be a very instructive time for people, because things were happening back then. The central banks weren't omnipotent, but they let things get out of control, and this time they had to squash it. And now here we are, 30, 40 years later, things are getting out of control again, and yet they're not stopping it. When you look back at that period versus now, how do you compare that and contrast the two?
Well, the same thing happened. The central banks didn't know they were letting things get out of control. It wasn't their plan. What's his name? Arthur Burns and Bill Miller, they were printing a lot of money, but they thought it was good for the world and the markets and the economy, and maybe it was. But one of the consequences, of course, was this serious inflation that partially was caused by the money printing. It did get out of control. Now, maybe today's guys are different. Maybe it's different this time. Maybe these central bankers are omnipotent. I mean, they have computers, so maybe they know a lot more than the ones back then. I would suspect that before this party's over, there are going to be a lot of people who are saying, you know, central banks are not as smart as we thought they were. You know, these guys are pretty dumb after all. In 2008, I do remember at one time, the chief economist at the Federal Reserve in Washington wrote a paper, and I wish I could find it, which started off by talking about, you know, there are people who say that housing is going to collapse and that there are problems, going to be problems in the housing market and therefore in the economy. But we have hundreds of the smartest PhDs in the world working for us, and we know it's not going to happen. Who are these people? What is wrong with them that they think they're smarter than we are? And I assure you that someday there's going to be a story like that about today's central banks, that somebody's going to say, you know, that Yellen woman, what was her name? Yellen. She didn't have a clue what she was doing. None of them did. It's not going to stop with Yellen, I assure you. They're all going to come out with an egg on their face. But maybe I am. Maybe the world has changed so much that it is different this time.
Well, I like your odds better than theirs, to be honest with you. I really do in the long term.
Well, we will see. But the 70s were a very interesting time, as you point out. For me, they were exhilarating because we were, you know, making money hand over fist. We didn't quite realize, didn't stop to think about it at the time. One reason we used huge amounts of leverage. I mean, we should probably be bankrupt, but we did use a lot of leverage, but we did keep getting things right. And so we were somewhat successful. But it was a lot of fun. There were certainly mistakes. My first wife. Huge mistakes in those days. But here we are, and it's been fun ever since.
So, okay, so the 70s gives way to the 80s. We get this Volcker coming in and stamping on inflation. And that puts the lid on a lot of these problems that the US was facing. But more importantly, perhaps, it begins this bull market that was going to run for 30 years. Interest rates peaked 17%, and they've been going down ever since to zero. Through the 80s, how did things change from your perspective? Obviously, that informational edge is already starting to get crowded out. How did you have to adapt to the fact that more people knew where Denmark was now, for example?
And that they had a currency.
Right.
It wasn't the US dollar. Well, first of all, I have to quickly tell you, in 1980 I retired because I wanted to have more than one life. I loved with a passion, and still do, in the investing world. But I didn't want to wake up when I was 75 and people would say, well, Rogers was a great investor, but that's all he ever did. He never did anything else. So I had more money than I knew existed in the world at that. It wasn't much money in retrospect, but at the time, if you're from the backwoods of Alabama, it looked like a lot of money to me. And I didn't think I'd ever have to work again if I invested it halfway decently. So I really did not continue that same pace. I set out to go around the world on my motorcycle. I rode through Central Europe on a motorcycle. I mean, I look back on some of the things that I did, and I wonder, how could I do that? How did it happen? But I did ride through Central Europe. I was trying to get permission from the Russians and the Chinese to drive through their countries. Now, I look back, what kind of idiot was I that I would think that the Chinese would let some capitalist, some American capitalist, drive across Red China on a motorcycle? And Soviet Union? Are you kidding? But I was knocking on the doors trying to get permission to do things like that. So I wasn't spending that much time sitting every day investing. But this isn't leverage.
This isn't how someone of your age at the time thinks, right? People don't think that way. You go back to, you're the only guy reading about the Danish Krona, and here you are, the guy trying to get anybody to let you ride your motorcycle across Russia. But I'm sure at the time, and from when I read Investment Biker, I remember thinking, I bet this guy was sitting there thinking, I'm going to ride across there and I'm going to find so many great investment opportunities along the way. I mean, that's how I picture your mindset being at the time.
No, my mindset at the time was, this is what I want to do. Right. I'd always wanted to see the world. I told you before that I discovered Wall Street. And I wanted to do it by motorcycle because I loved motorcycles. I just started riding. Well, what little time I had in the 70s, I spent on my motorcycle, riding around. Oh, that was, that alone meant there was something wrong with me on
Right.
Wall Street in the 70s. But I was determined to figure out a way to see the world on my motorcycle. And obviously, you could ride around the world without going through China, without going through Russia. But in my mind, that didn't count. That was not really going around the world. I didn't want some guy to say, come on, you didn't go around the world. Right. You didn't go through China. You didn't go through Russia. You didn't go around the world. But that's what I wanted to do. I thought that was more important than spending all of my time in front of a computer. I'm not even sure we had computers by then. Reading about Denmark. I wanted to do that, and I spent time doing that. I did stumble. I was a professor for a while, that's right. I stumbled into that. And I was still investing my money, but I was not with the same intensity of focus, no leverage, that I did in the days of the 70s. I was still investing. Yes, things were changing. People knew what hedge funds were, certainly by the end of the 80s. People did have computers eventually. People did know people knew about Japan. Japanese market had a huge bubble in the 80s. A lot of people were investing in Japan. Japan was probably the first foreign market that a lot of people invested in, and that was because of the big bubble of the 80s. Didn't think of it as a bubble in those days, but everybody knew it was liquid, it was big, there was more information, Mira had an office in New York. All sorts of things like that were changing, and it was new and different. You didn't have to wake up in the middle of the night and say, how do you call Japan? I remember you had to call the operator in the 70s to call Australia to find out or to place an order. But by the 80s, you didn't have to do some of those things. There was a lot more information, a lot more investing. People knew what hedge funds were by the end of the 80s. The market was going higher. No, it was all a different world, and it continued to be a different world. MBAs were coming to Wall Street. What few MBAs there were in the 70s went to General Motors. Wall Street was a backwater. It was not a place where reputable people would go. It was for the idiot sons.
Right. The black sheep, right. But still at this time, I remember reading something you wrote about Austria, about buying Austrian stock. And I remember reading this after the fact and thinking, we're talking late 80s, early 90s, I guess.
No, early 80s.
Early 80s, okay. But still, I mean, just for anyone that has read it, I'd much rather you tell the story than me, because it blew me away when I remember reading the story.
You made me think of a story, speaking of interest when we were younger. After Yale, I did go to Oxford, and in my college at Oxford, there were I was not the only American, and all the Americans usually sat together. And I remember having a discussion at the American table once. All these guys wanted to go back to America and go into politics. They all wanted to be president of the United States. And I said to them, I want to be a gnome of Zurich. I have no interest in being president of the United States. Because a gnome of Zurich, in those days, were these mythical. We thought the Swiss, they didn't, because they didn't know anything about investing. But we all thought that these mystical gnomes of Zurich knew everything and controlled the world. So I said to them, I want to be one of those guys. I want to be the guy with all the money and pulling all the money. But in the 80s, I had read about Austria somewhere. I don't know what I read, something that Austria was going to institute measures to encourage the stock market. They didn't have much of a stock market, but by the 80s, people started realizing you needed capital markets. And I remember the Scandinavians put in tax incentives, and needless to say, the market went up. These are things that happen normally. So I was going to find out about Austria, and I called up the largest bank, Austrian bank, was called Kreditanstalt. You may remember it from 1931 because it went broke, and it was the largest bank in Central Europe, and it caused, some people say that was the touchstone for the Depression, the Great Depression. But they were back in business after the war, and I called up the head of Mike, I'll think of his name in a minute, the head of Kreditanstalt in New York, and said, I would like to open an account to invest in the Austrian stock market. He said, we don't have a stock market in Austria. I hung up the phone as quickly as I could, got on the phone and flew to Austria. Because I knew that at the head of the largest bank in New York, one of their major international, I didn't know they even had a stock exchange. I knew I was owed to something. So I flew there. I remember, and I saw people in the government, et cetera. They said, yeah, we're going to put through these measures to give people tax incentives to invest in stocks. And Kreditanstalt didn't have a stock market department. They had one guy who was a guy, and that was his job. I mean, he was obviously a guy who wasn't on the rise. Right. At Kreditanstalt, he was just somebody they shunted aside. And he put in orders. I bought shares on every stock. There were only 24 stocks listed at the time. And I think back on this story. It's amazing. There was something called the Barron's Round. Still is something called the Barron's Roundtable. Well, I was on the Barron's Roundtable, and I was explaining why you should invest in Germany. Blah blah blah. Siemens is a lot cheaper than General Electric. Blah blah. Things like that. And they're learning about stocks in Europe. And I said, if you really want to invest in Germany, though, you should invest in Austria, because it's unknown, it's untouched. Nobody invests in Austria, and it's dirt cheap. And they're putting through these measures to make the Austrian stock market attractive to investors, where everybody saves and they don't put it in equities. The one guy at Kreditanstalt was late to work that day. He didn't read Barron's. He had no clue about anything, but he got to work like 11 o'clock, 11:30, and all these messages. Remember the little messages?
Yeah, the post-it notes.
You know, call here, call here. He didn't know he didn't have a clue what was going on. People from all over the world were calling him up to buy shares in Austria. And the market was going through the roof. The market doubled that year. And this poor guy, he never made it to the top, I assure you, of credit and stuff. But the Austrian stock market, and there's still people, some, not many, I'm sure now, who said that's the guy who kissed the Sleeping Beauty of the Vienna Stock Exchange and woke her up. And that was a lot of fun.
But what's amazing though, that's again, we come back to this idea of just sitting down, reading about things, just doing some thinking about the possibilities, acting on them, and what is clearly going to happen ends up happening. But it seems crazy to say that's a lost art these days, but it kind of is almost.
Well, I don't know if it's a lost art. I guess it is, because I'm sure that right now there's a story that in 20 years somebody will be telling about how he or she, more likely she these days, discovered or read something and thought about it and did something. One I just thought of, I don't know if it's going to come true or not, but I recently bought shares in Zimbabwe. Zimbabwe's a mess, a disaster.
Yeah.
But I read somewhere that Zimbabwe finally had scrapped its currency. The Zimbabwe, it was called the Zimbabwe, the most recent currency I think was Zimbabwe dollar.
Yeah.
They scrapped it. They finally just burned them all up.
50 trillion dollar note.
Threw them in, everybody has seen
That's right.
those Zimbabwe dollar notes. Well, they scrapped it finally, gave up, and dollarized the economy. So I've started buying Zimbabwe shares on the theory that, the thing has been a disaster, but now even Mugabe is realizing that something has gone wrong here in the past 35 years, and that in Southern Rhodesia, as it used to be called, was a gem of Africa and of the British Empire at one time. Mugabe's ruined it in the 30s. You give somebody, a madman, enough power for 35 years, he can destroy anything. But he's old now. Somebody has realized we got to start over. So I've started buying Zimbabwe shares.
But how many people do you think are doing that? Because people
I doubt if there are very many.
Right.
But I'm saying this might be a story that 10 or 15 or 20 years from now, people say, "Why didn't I think of that?"
But people, and I travel a lot and talk to a lot of people, and I'm constantly fascinated by the fact that everybody's time horizon is now either 10 minutes or
next week.
or until I get stopped out. And getting stopped out means I lose 5%. No one. And I mean, pension funds who are struggling to get any kind of return, anywhere near the 7-8% they're promising their unit holders, and yet they're still not looking at long-term investment opportunities. I mean, farmland's a great example, particularly talking to you, because you've been talking about that story for a long, long time, about how it's going to be the farmers driving the Ferraris in years to come. But that's something that people either can't get their heads around because it's just too long a time horizon, or they don't have the latitude within their investment strategy to invest along those lines. But how do you try and make money in a massively compressed timeline when you've got to be in and out, right all the time?
Well, fortunately, Grant, I don't have a committee that I have to answer to. I don't have to explain you'd be one of the few people in the world that knows that I invested in Zimbabwe 2 weeks ago or 3 weeks ago if we weren't having this conversation. I assure you, when I go over to the bar tonight, I'm not going to say, guess what I did today, guys? Last week I bought Zimbabwe. I even forget about it until we're having this conversation. I'm not sure. Part is I don't have those pressures, that kind of pressure. I'm not interested in the short term. I'm not good at the short term. I'm terrible. I assure you I'm the worst short-term trader in the world.
Well, you're the second worst in this room. So.
No. You may think you're bad. I'm sure I could top you no matter how bad you are. Market timing is not my cup of tea. And since I'm not any good at short-term, and I do know the benefits of the opportunities if you invest for the long term, and I'm lazy. It's a lot easier to buy Zimbabwe and not have to think about it for 10 years, not even remember it for a long time, and then wake up one day and say, oh my gosh, how did I do that? How did I do that? I haven't put a lot there yet. In fact, now that I think about it, I got to do more research before I can put a lot more money there. But these are the kind of opportunities that still do exist. Now, I don't know if I'm right or wrong about Zimbabwe. Obviously, we'll know in 10 years. But there must be opportunities like that, even though we do all have Google now, even though information is instantly available. But one of the things I have learned about humans, about us, about life is that 100 people can go into the room and hear exactly the same story. Only 4 or 5% are going to get it right, really understand the full ramifications, the full meaning. Most of the others are going to do the same thing, whatever the same thing happens to be, and chances are it's not going to be the right action. So even though you can't Google judgment.
Right, correct.
And get it. You can get the meaning of judgment, but there's no pill yet which gives you judgment.
But that ability to think critically about stuff like this, I mean, that's what you learn reading about Denmark and reading all these things. You learn how to think critically about things because you have to put those pieces together. Now, you go on, you hear a story about Zimbabwe, you Google it, you look at the first 3 headlines, you kind of take in whatever you can from those 3 stories, and then you go, yeah, I know about Zimbabwe.
That's interesting. I didn't Google Zimbabwe there was the only thing I needed to know. I know a little bit about Zimbabwe from my travels and from life, but you're right. I don't know. I wish I could figure out if I have a gift or a skill, and I'm not even sure I do, because I made plenty of mistakes. I'm sure I made plenty of mistakes. I'll tell you about my first wife again, if you want to know. I don't know if there's I wish I could figure it out so I could put it in a bottle and sell it. If I could just sell that skill, that gift, that ability to think around corners, boy, it certainly would be useful. I have 2 little children. I want to teach them. If I can teach them nothing else, I want to teach them to think around corners, to not accept the conventional wisdom. Or when you see something, instead of saying, hey, that's interesting, I want them to say, now wait a minute, what does that really mean?
Right.
Now let's figure out what is really going on and how to make money out of it.
Well, I think that is, it is a skill you can teach. I think the problem is people don't realize it's there to be taught. I mean, I've worked with several guys over the years in various parts of the world who were just incredibly intuitive at joining the dots. So they'd see a piece of news and their brains would take them to the 3rd, 4th derivative of that news. So while everybody's jumping around trying to act on the headline, they were 3 steps down the road and saying, you know what, that will lead to this, that's where I'm going to invest because I've got time. And I watched guys do this. And so I think it's a skill you can teach if you can find people who are willing to learn it.
Yeah, and if you can find guys who are willing to teach it. I mean,
right.
To sit down and structure a whole course, if you will, that takes a lot of time. I was once a professor. I was once a school teacher. I know it takes a whole lot of time to be a school teacher. Even to be a bad school teacher takes a lot of time. And the guys who are good at it probably got other things to do. They'd rather use it themselves rather than go off and be a school teacher. So you got to have the people who can do it and then the people who are willing to teach it. Have the time and the interest in teaching it. And yes, you can probably teach it, but the way you would teach it, I think, is by example, by using many stories that have worked. I once taught a course at Columbia, and that's what I taught. I concocted this course that I said, okay, pick anything you want to pick, any year, and pick a stock or an industry, and figure out what's going to happen to it only with what you knew then. Say it was January 18th, 1982, and you picked airlines. You got to tell me what's going to happen to airlines. But you cannot look ahead. You got to come in here, explain to me what's going to, and how you would have known it. How you would have known it. the way they did it, they looked at 6 months later at the Wall Street Journal and they saw what happened, but that didn't count. They'd all tried that. I said, no, this is no good. You have to go back. Now this is trying to teach what you and I are talking about. How you could have known January or July of 1982 what is going to happen to this company, this stock, this industry, based only on what knowledge was available before you did that. It was a successful course. It was a lot of fun. I mean, I don't teach anything now, but I tried doing it at one time. So yeah, but I'm telling you, it takes a lot of time.
But were there any guys in that class? Were there any guys who just came in and got it? There weren't.
Listen, MBAs. I remember when I went there. It was an Ivy League business school, and I remember thinking, well, these guys are all educated. They've all been to fancy universities, got fancy degrees. They wouldn't be here. They didn't know who Socrates was. They didn't know anything. It's astonishing how badly educated they were. I said to them, I'm going to teach this course about the Socratic method. Does anybody here know who Socrates was?
Well, maybe the Brazilian soccer player if it was the 80s, possibly.
But empty expressions, and they didn't have Google in those days, so nobody knew who Socrates was. So, I mean, I was appalled in my early days of exposure to graduate education, Ivy League graduate education, and how uneducated most of them were.
You want to unfuck your shit?
This is live.
Yeah, that's being recorded. Hey, listen, if you want to unfuck your future, then come and join us in the Real Vision community. Incredible platform, amazing content, some of the smartest people in the world, and amazing tools. And guess what? It'll cost you nothing. Come to realvision.com. I'll see you there, and let's help you unfuck your future.
I want to go back to that Zimbabwe idea, because another place that I know you've been looking at and I've heard you talk about is Russia. And you went to, I remember, so when I read Investment Biker, I think the first chapter was to Russia or flight to, but that was the big thing for you. Is I want to get into Siberia. I mean, you were trying to get into Siberia when people who were sent there, it was the worst thing that could ever happen to them. Now, so you ended up getting permission to go to Russia, and the Russia you saw then and the Russia you see now, and you're someone who's talking bullishly about Russia when everybody is saying Putin's finished, this whole thing is just a house of cards waiting to go down, you wait and see. What do you see in Russia now versus back then that makes you think?
The first thing that you just said, which would ring a bell with me, is everybody says
precisely.
Russia is bad and it's finished and it's going down. Now, whenever I hear that about anything, I say, aha. It's only because I'm older and more experienced. I say, aha, wait a minute. If everybody is convinced, then I have to check to see, because usually everybody's wrong when everybody's thinking the same thing. I'll expand on that a little bit. I first went to Russia in 1966 with an Oxford student group, and I came away, this can't work. This is lunacy. It's not working. It cannot work. It cannot work. And was pessimistic about Russia for the next several decades. But I did want to ride around the world, and to ride around the world properly, you got to go through Soviet Union. If you look at a map, you'll see what I mean. So I was knocking on the door in the 80s with the Chinese and the Russians, and got permission from China, rode across China, made a film of it. So I had some credentials by this time, and I was writing the Russian. I went to see somebody, something to do with Russia in Rockefeller Center, and the guy said, I said, what I want to do? I want to ride across Russia on a motorcycle. Get out of here, you fool. But he said to me, there's this one group in the government that they might be able to, he didn't know how to translate it. It was such an obscure group. So he wrote down to me their address in Russian. And I went home and pasted it onto an envelope and sent off a letter. Because nobody, he didn't even know how to, he was Russian, he didn't know how to translate it. I certainly didn't. So I pasted the address on the envelope off to Russia with a letter in. There was no Google in those days. Sent this letter to Russia, Moscow, saying, I want to ride my motorcycle across Russia, blah, blah, blah. I did it across China. And lo and behold, I get a letter back in English from, I remember his name, from Mr. Sungarov, saying, yeah. He didn't know I'd been knocking on the damn door for years, saying I want to do this. It's so you're sitting in an office and you knock on the door every day, and then a guy comes and opens the door and says, what are you doing here? Come in. That's what happened. He said, come, sure, why not? So I flew to Moscow, not believing him at all. Showed up. Remember, this is communist Russia. This is the worst of all. So Mr. Comrade Sungarov said, nobody, why would you want to do it? No roads, nothing out there. It's a tense, a deep, intense jungle. What word am I looking for? Anyway, we don't know why anybody would want to do it. We're going to let you do it if you want to. Now, it obviously was a sign. It was Russia in the 80s. It was opening up. If I'd been smart, I would have known. Aha, this is a sign that something's changing in the Soviet Union. Brezhnev was coming along with all of his opening up policies, and this was part of it. Sure. Now, I'd been knocking on the door for a long time. He didn't know that. He didn't care. But he said, sure, come on, you can do it. But it intensified my pessimism about communism and the Soviet Union because it was just a mess, a disaster out there. I did that in 1990 when I drove across. And I continued pessimistic about Russia because I just knew it couldn't work. And my experience demonstrated that it was not and could not work. But in 2012, 2013, I thought that I saw, now remember, I've been going to Russia since '66 at this point, so I had a little bit of experience and a little bit of knowledge. I thought I saw changes taking place in the Kremlin. Putin, who had been considered anyway a KGB thug by many people, something was changing, and acted like a KGB thug for a while. But there I thought I saw changes. So I started getting optimistic about Russia. It's got vast resources. Oh God, does it have vast resources? They don't even know what they've got yet. They cannot know, it's so big. It does have a convertible currency. It has very little debt. Very few countries of its ilk have convertible currencies, and most of them have a lot of debt. But it has virtually no debt. So I could see what I thought were changes taking place. So I started investing. Fortunately, like everything else, I'm so lazy, I don't get around to things. Then along came Ukraine, and it really caused things to drop even more. But that meant I better get going because, hey, prices are collapsing. So I started increasing my investments in Russia, became a director of a Russian company, a fertilizer company. I'm optimistic about agriculture, which we haven't talked about, but we can if you want to. You mentioned it, but it seemed perfect. Agriculture, Russia, what better combination?
But how do you mitigate the problems you have there with the rule of law, which is, to me, looking from the outside, that seems to be the big problem in Russia. Is there's really no way to perfect your asset. There's no, unless you know the right guy who knows the right guy.
Well, Grant, I will tell you that that's always the case, no matter where you invest, especially if you invest in new markets. Including the United States. I mean, I know we claim we have this perfect rule of law. Ha! I mean, the more you get into it, the more you know that there's the rule of law and there's the land of the free, and then there's the United States, which is not the land of the free anymore, and which is not, the rule of law is not what we all were taught in high school, the junior high school, about the rule of law. How do you mitigate? I don't know. You have to. It's part of the whole thing. Zimbabwe. What rule of law? Zimbabwe is Mr. Mugabe. Just about any place where you, especially any new place where you invest, you have to worry about things like that. It doesn't always work, I assure you. I wish it did. It would be easy. No, it's just, it's in this case, it's part of the judgment I have made and am making and constantly am worried about, that something has changed in the Kremlin. I'm sure that there are injustices taking place in Russia right now, even though I perceive change. I'm sure, though, that next week you can come to me and say, look, don't you see this? But look, there are injustices taking place in America every day, every day. So it's part of the overall judgment, and we'll know in 10 years.
Well, I think the whole idea of, and let's lump Russia in with frontier investing, because it's almost gone back to that part now in most people's minds. This concept that...
By the way, for me, it was never an investment.
Right.
Well, I have to tell you one story. Make sure I get the right timing right. I was in Russia in the last year or two, and a journalist said to me, well, have you ever invested in Russia before? I said, yeah, in 1998, I was short the ruble in a big way. She said, what? I said, I shorted the ruble in 1998 and made a lot of money. And she said, that's not what I meant. I said, well, yes, I have invested in Russia before. Yes.
Well, we've come a long way, because she understood what you meant by shorting, which is good.
Well, by then, everyone understood about evil capitalists,
right.
Because evil capitalists were everywhere in the last 25 years in Russia.
But yeah, this idea that, when you go into somewhere like Zimbabwe, you go into somewhere like Russia, there are risks, and it's taking investing back to how it used to be, whereby there are certain risks that you can't eliminate. And once you build as many walls and fences around the investment as you can, there's always going to be a place for the rabbits to get out. And you just have to work out the risk-reward profile and work out whether it works for you. Instead of in the West, where we have this idea that, as we started off talking about this, nobody can get hurt anymore. You mustn't, we've got to ring fence everything and make sure I'm not going to invest in something that carries risks I can't mitigate.
Well, one thing that I have learned over my investment career is, if you find things that are cheap, even if you're wrong, you're probably not going to lose too much. You can lose everything. No matter how cheap it is, you can lose 100%, I assure you. There's no such thing as you cannot lose. You can lose everything. But usually, if you find things that are cheap, you're not going to lose a lot. Now, look at Russia as a perfect example. I mean, it's hated. You've already said nobody would invest in Russia. Well, it's very, very cheap. Was very, very cheap. And therefore, we hope that even if I was wrong, I wasn't going to lose that. I mean, the currency collapsed, the stock market, everything collapsed. So if I was wrong, I probably wouldn't lose too much. By the way, speaking of that, one of my larger positions is shares in the Moscow Stock Exchange, the home of Lenin, the home of Marx, not Marx, Stalin. It's at all-time highs. It's unbelievable. But the Moscow Stock Exchange shares are at all-time highs. I look at myself and say, this cannot be. Other things aren't at all-time highs, far from it. But I own Aeroflot, which is not at all-time highs. But it is working. It is working. But that's partly, I think, because you buy something so cheap. This not last week, yesterday, I've had some orders in the Chinese market, well under the market. I got hit 2 days ago. But they're already up like 15%. Because, and it's a lesson I've learned many times. If something is really collapsing, if you have the stomach and you buy it, chances are you're going to make money. If you buy panic, and I'm not any good at buying panic. The only way I do it is I put the market in and close my eyes and look the other way and hope it doesn't happen. But then when it does, I usually make money.
But that's interesting to me, because what I find people do, they'll look at that, they'll put their stink bids in somewhere, and when they get hit, they panic. It's something that looked like, if I get it there, I'll buy those all day. And then they buy them an hour later, and suddenly like, oh my God.
Oh, I didn't mean that.
Right. But that to me, that's something that separates the greats from the guys that are just kind of playing around the edges. The ability to see what value is, and just because the time of day has changed, it doesn't mean the case has changed. You have to say, look, it looked value at 20 when it was trading at 40. I bought it at 20, okay, it's trading at 18, but it's still value. But that's a really hard thing for people to do.
No, I know. That's why I look the other way and close my eyes and hope it doesn't happen. I hope it doesn't happen. But I have learned, just because I'm more experienced now, I have learned that usually if you, and I don't have the courage to buy panic most of it. I'm like everybody else. Right. But if you figure out a way to buy it, you usually come out ahead. And I've been buying real panic in China the last 2 days.
Well, let's talk about that for a minute, because it's happening right now, and it's extraordinary to me what we're seeing in China. What's your take on what's actually happening there?
Well, best I can determine, it's the evil foreigners.
Right.
And the evil short sellers.
Yeah.
It's the evil short selling foreigners, except there aren't any. Very few foreigners investing in China, and there are very, very few short sellers. So if we eliminate the evil short sellers, I don't know who's left. What happened was, you get out a chart, you see the market went straight up, and it looked as though there's going to be an incipient bubble. It wasn't a bubble yet, in my view. I've lived through many bubbles, shorted many bubbles. It was an incipient bubble. It was going to turn into a bubble. And I remember I was in China recently speaking. I said, look, if it keeps going like this, you got a bubble, and then we all have to sell, and I don't want to sell. So I hope it doesn't turn into a bubble. I hope that something comes and calms it down. Well, something came and calmed it down. More than I thought, I assure you. I had no idea it would be this big. But what seems to have happened was, obviously, you look at the chart, you see it went straight up. A lot of people piled in. Many stocks, obviously, got ahead of themselves. And there was speculation. Margin lending is not terribly dangerous, on the numbers anyway. But it apparently, if you read the press, and not that it's reliable, but there were off balance sheet margin, third market kind of borrowing. There was a lot of that apparently. Whatever happened, some spark hit, and people started selling. But like every other over-leveraged market or market with leverage, many people had to sell, and it's gotten completely out of control. It's so bad that some stocks have just stopped trading. I mean, in China, you can go to the exchange and say to them, we don't want our stock to trade anymore. I mean, you couldn't do that in New York for any extended period of time. And so a lot of them aren't even trading. But that exacerbates the situation, because the people who have loans are the people who have to sell or think they have to sell. Then they got to sell something else. They cannot sell the one that stopped trading. So everything else is even worse dumping. And apparently they've had borrowings against commodities, copper, which they could easily borrow against. So now they got to sell the copper, because they can't sell the shares. They borrowed against the copper to buy shares. So they have to dump the copper because they can't dump the shares. So it's one of these feeding frenzies. The government has enacted measures to try to calm things down. I wish they wouldn't. I mean, my longs are going down, I assure you, but I would prefer that the government let my longs go down rather than step in to try to boost them up, because whenever you have an artificial situation, artificial situations are not stable. They cannot be stable by definition. So I wish the government would go ahead and just let the panic happen. For all I know, we've hit the natural bottom anyway. I mean, the market is down like 30% in a month, or maybe more in a month. But I saw what was happening, so I said to the broker, here, put this order in. Don't tell me. And they have to tell me when I get hit. But in the last 2 or 3 days, have had orders executed. Fortunately, since I'm talking to you, I can't run around and panic and sell them, turn around and sell them again. And I don't want to, because that turns out they're going up. So I don't want to sell them.
But you spend a lot of time in China now.
I certainly, yeah.
Do you think the Chinese leadership, for want of a better phrase, can stick the landing? Do you think they're competent enough? And I don't mean that in general terms. I mean, are they competent enough capitalists at this stage to do what dyed-in-the-wool capitalists in the West have singularly failed to do for many, many years, which is allow capitalism
to work?
Yeah.
Well, they're not letting it work. They're stepping in. They're doing what they're doing. Somebody, I'm sure all the brokers are called, just like in New York, they call up Washington and say, You've got to
gotta
save
do
Western
something.
civilization. And I say, it's nothing to do with me. You've got to save the world by stepping into the market and protecting it. I'm sure exactly the same thing is happening in Shanghai. They're calling up Beijing saying, our thousands of year old civilization is going to collapse unless you do something to save the stock exchange. I'm sure that, I know what's happening because I can see what they're doing. They're pulling out these stops, these measures to what they hope will do is to support the stock exchange. I think it's the wrong thing to do. Listen, there's nothing sounder than a real bottom. You know, if something totally collapses and it hits where nobody's left to sell, that's a real solid bottom. I wish they would let that happen. I mean, it may have hit some kind of natural bottom already, but even if it has and it rallies, then we have this overhang of the unstable artificial measures, which the government, they stopped IPOs, for instance. Well, the IPOs are going to come back someday. Then what happens, et cetera.
But if we let's put the stock market crash to one side for a second, and just talking about, because a lot of people give the Chinese no chance of executing what they need to execute to open capital markets, make the currency convertible, bring these guys to manage that economy. And Stephanie Pomeroy said to me something that really stuck in my brain. She said, you know, nobody gives the Chinese a chance of pulling this little trick off, of managing that economy. And yet, they have absolute faith in Bernanke and Yellen and Carney and Draghi to pull off the same trick. What's the difference between the two?
Well, I have no confidence in Bernanke and
Right.
Yellen and the rest of them, as you well know. I will say that China has been the most successful country in the past 30 years, so they have a little better track record. You know, America 30 years ago was a creditor nation. Now we're the largest debtor nation in the history of the world. Not just the largest debtor nation in the world, we're the largest in the history of the world. So the Chinese have gone from backwoods, no roads, no nothing 30 years ago, because I rode across, I can tell you there was nothing there, to being an astonishing success story. So if nothing else, the last 30-year track record would indicate to me that they may make mistakes, but they've got a better chance of pulling it up. You know, to become head of China is an extremely, extremely difficult process. In America, if you get a nice suit,
Right.
and you go on TV,
And you got some
you
money.
could be Barack Obama.
Yeah.
You know, you could go from being a community organizer to president of the United States. It doesn't work that way in China. You have to start as a young person, and you have to work your way up. They send you out to provinces. You have to run municipalities or provinces. I mean, you're really, really tested over 50 or 60 years to get to be at the top in Beijing. Those guys, whoever they are, have been through a long, arduous ordeal to get to the top. Now, that doesn't mean they're competent. That doesn't mean they're going to be successful. But it's certainly a better system than ours, where you just show up and say, let's have a nice smile. I don't know that they're going to succeed at it. As I said, the track record is such that I suspect they will. There will be problems along the way. You know, America became the most successful country in the 20th century. But along the way, we had a horrible civil war. We had 15 depressions. We had very few human rights. We had very little rule of law. We had massacres in the streets. I mean, America was a mess, a huge mess. As recently as the end of the 19th century, people in Europe said, whatever that country is, it's going to be a disaster. They were fleecing the foreigners. You know, Barings, remember Baring?
Yeah.
Baring put a lot of money into the U.S. A lot of people put a lot of money into it, got fleeced, took them for a ride, railroad bonds and a lot of other things. So America was not a great paragon of virtue as recently as the 1890s. And yet, we did a pretty good job and became the most successful country in the 20th century. And China's going to make many mistakes, but I certainly have more confidence in 2015 in the guys in Beijing than I do in the guys in Washington, I assure you.
Okay.
My children speak Mandarin. They also speak English.
Well, that's
obviously.
right, and that's what I wanted to ask you about. And this because you very vocally upped and said, Asia's the future. And again, there's a trait here that we're starting to get a good look at here. You said, you know what? I know what you guys are doing. I'm going to go and do this, and I'm going to take my family and I'm going to take them to Asia because I want my kids to learn Mandarin, and I want them to grow up in that part of the world where I see tremendous prospects of the future. Again, another big decision to make. But what were the specific catalysts? Was it a lack of? Was it what you wanted to leave behind, or what you wanted to go to?
You know, I was very much against children for many years, all my life, in fact. I used to feel so sorry for people who had children. I was never going to do something so foolish as to have a child. I mean, how could you ruin your life by having children? I was totally wrong, 100% wrong about children. These little girls are so much fun for me. But I used to see people. One reason I thought, God, what fools they are. You know, they would move to another town because a football coach. Right. They could go to school with a great football coach or a music teacher. I said, you're changing your whole life for your children? Since I first went to China, I would lecture and broadcast and write that you should teach your children and grandchildren Mandarin because it's going to be the most important country and language in the 21st century. Well, then I had one. Now what do I do? So we started teaching the little girl Mandarin. She spoke great Mandarin, but then it came a time after she was 2 or 3 when I realized it's not going to work unless, many people, scores of people told me about, you speak German at home or Chinese at home or Spanish at home. There comes a time when they're 9 or 10, they just won't listen to you. You speak Spanish, they speak English. You speak Chinese, they speak English. They don't care. It's not cool. So I realized if I were really serious that I was going to have to take her to a Mandarin-speaking city, but she didn't have any choice. Just she would grow up speaking Mandarin. And then I said to myself, I'm just like those saps who used to move for a football coach or something else. But it was very important to me. So off we set. We set off to find a place. We tried the cities in China, but they're horribly polluted, the ones we would want to live in. We wound up in Singapore because in Singapore they speak English and Mandarin, and I don't speak Mandarin. So I thought that'd be a good compromise. Singapore has great education, great health care. Everything works in Singapore. What I didn't know was they speak bad English and bad Mandarin in Singapore. Now, some speak good Mandarin, some speak good English, don't get me wrong. But so Singapore's been a great choice for us, but it was pure and simple so that girl, now we have 2, one was born here, those 2 little girls would grow up knowing Asia and speaking good Mandarin. That's why we're here. I was, old enough and I had a little bit of money, so I didn't need to worry too much more about. And I figured I could adapt and I could do something in Asia. They still have Google, they have computers, they have phones, better phones here than in the U.S. Better Google here than in the U.S. So I knew I didn't have to worry about doing something. So I came here to make sure those 2 little girls know Mandarin and know Asia.
And that's obviously worked out really, really well because
in Singapore they have a Mandarin-speaking contest. Every school kid, whether he knows it or not, is in the Mandarin-speaking contest because the schools say, okay, these are the best ones. My daughter, when she was 10, she won. She won the whole thing. I mean, I was unbelievably proud, but I was maybe in shock.
Right.
If I went to a movie where a blue-eyed kid was the best Mandarin speaker in a Chinese country, I'd say, come on, this is worse than Rocky. Right. This is absurd. Come on, don't make me believe it. She won it 2 years in a row. And so that part of my scheme has worked. The little one who was just here, she won first prize in her age group recently. So it's working. I mean, I didn't expect it to work that well. I'm very pleased it worked that well, but no, it was all for them. It was all to make sure that, I was one of those sappy parents who did something for his children. I used to hear the stories all the time of people who would do what foolish things they would do for their children. Here I am. The experiment worked. My kids speak Mandarin. They know Asia. You can ask me in 30 or 40 years if I made the right decision.
We'll see. Okay. All right. Well, I'll take you off on that.
It's a long-term investment.
I will take you off on that. I mean, long-term investment, again, is something that you've made a particular focus of yours. And there's really no longer-term investment than agriculture. And that's something that you have been incredibly vocal about and very consistent in your views for a long, long time. And it suddenly
Not that
seems
long,
as
but
though...
a few years, yes.
Yeah, but that's a long time. In this day and age,
Oh, yeah,
an investment
yeah,
idea
yeah,
that
yeah.
goes for a few years is... People, and I've spoken about agriculture with investors around the world, and they struggle with it immensely to get their heads around, why would I invest in something that by the time we make any payoff for it, I'm probably in another job. Why would I do that? How do you see that, the agriculture proposition?
Well, your first statement is the most important, that people say, why should I do it? Because it's going to take me too long. Right. Well, okay, I don't have a committee. I don't have to worry about that kind of thing. Fortunately, it doesn't mean I'm going to be right, I assure you, but I'm convinced that one who goes into agriculture, and there are already success stories developing, as you probably know, of people who have gone into agriculture and are making money. Farmland was very cheap. It still is, but it's not as cheap as it was, and more people are making money in agriculture now. Why? Why is this going to happen? Agriculture has been a horrible business for 30 years. That's the first thing that gets my attention. Anything that's been a horrible business for a long time deserves looking. Doesn't mean it's going to change. Doesn't mean I should invest in Zimbabwe because Mugabe's been ruining it for 35 years, I assure you. But something that has been ruined for a long time deserves a look, to me. It's been so bad that we're running out of farmers. The average age of farmers in America is 58. Japan is 66. Canada is the oldest in recorded history. Australia is 58. I mean, more people commit suicide in the UK in agriculture than any other sector, according to the BBC. Millions of Indian farmers commit suicide, have committed suicide, as you probably know. It's been hard. More people in America study public relations than study agriculture. I mean, it's a nightmare. No, who wants to be a farmer? Nobody wants to be a farmer. Everybody's getting out of it. That may mean there are great opportunities. Agricultural prices are still down considerably from where they were 15 or 20 years ago. Sugar is down, I would say, 75% from its all-time high. There's not much in life that's down 75% from where it was 40 years ago. But sugar prices were terrible. Who would be a sugar farmer? So, it doesn't mean it can't go down another 80%. It can from where it is now. But either something's going to happen, or we're not going to have any food at any price or any clothes at any price. And there are now people, China, for instance, is putting through all sorts of incentives for its farmers because Mao Zedong ruined Chinese agriculture, totally ruined Chinese agriculture. The Russians, you know, communism can ruin anything. It certainly ruined Russian agriculture. You read some of the great Russian novels, I mean, the farmers were kings. They had a lot of serfs, but they lived like a king. They had great agriculture. China had great agriculture. So there have been periods in history when the farmers were among the ruling classes and were successful. That's not been the case in the last 30 years. Now, we're either not going to have any food or something's going to happen to make food, agriculture prosperous again. And in my view, it is a good place to invest. And for those who are doom and gloomers, the guys who say the world's coming to an end, well, having a farm is good. If we have that chaos, which some people expect, and what we might have, farming, you better have a nice little farm somewhere, and you better know how to plant a seed, because you will probably survive. Now, that doesn't mean that farmers can't go broke and can't go bankrupt. They have many times. But always in the end, you come out the other side having productive land has been a good thing to have down the road.
But when you think about that, so I'm just curious about your process, because the big picture idea is a great one, and the case you lay out is flawless. It's tough to find any cracks in that. But then the next stage is, okay, how do I want to...
The crack is timing.
Timing, precisely. But that's the crack in
That's
everything.
the only crack.
Yeah. But how do you then go about investing? Do you think, right, I want to own the land, or I want to own the commodity futures, or God forbid, you just decide, you know what, I can't be bothered, I'm just going to click and buy the MOO ETF because it's easy. Or, you know, and that's what people do, right? That's why successful investors, I think, are successful, because they don't want to click the mouse, but they want to find the best way to do this. What do you think is the best way to do this?
Well, the best way is to become a farmer.
Right.
Buy yourself some land and become a farmer. But I hope you're competent, and I hope it's going to rain on your land. Because if you're not competent and it doesn't rain on your land, you're going to go broke. I assure you, you're going to be part of the horror story of the past 30 years. Now, I didn't become a farmer because A, I know I'd be a terrible farmer, and B, I don't have any interest in being a farmer. So you find a farmer and you buy him some land or her some land. There are many ways that you can, but there are some public agriculture, I mean, there are plantation companies that are public in places like Malaysia, Indonesia, used to be in Africa. There are companies you can buy that are in the farming business. You can buy a seed company, a fertilizer company, tractor company. You can buy the agricultural futures, the ETFs. There are ways to do it. You can invest in agricultural markets. If agriculture does well, if cotton does well, Pakistan is going to do well. The whole Pakistan economy is going to do well. So you can buy department stores in Pakistan, chains of department stores. There are many ways to do it, but the very best is to buy yourself a farm. In Australia, there are publicly traded farming companies. I own one. It actually just got taken over. Fortunately, it got taken over by another farming company, which I also own. So, but they're getting to be fewer and fewer of those because they're so cheap that they're buying each other up. That's sort of becoming a farmer. Now, I'm not going out there every day and getting my hands dirty because I wouldn't be any good at it. But there are plenty of ways to do it. Buy yourself some land and lease it. Make sure it's going to rain, and make sure you lease it to the right competent person.
Don't lease it to Greece.
Right. Yeah, you're going to be.
So,
I'm not going to say it because. Go ahead.
Well, okay. So, putting all this together and taking all those lessons you've learned, when you sit here today and you look at the world and you look at what's going on in Europe and you look at the pressures on China and you look at the pressures that seem to be building in the United States, but it seems to be avoiding because it still has that semblance of it's going to be the last domino to fall. So people aren't worrying about it yet. All those lessons you've learned, the things that you've distilled from 50 years of doing this, what's your take? When you look at it, what are you thinking about the big picture?
Well, the big picture is make sure your children speak Mandarin.
Right.
And your grandchildren, make sure they speak Mandarin, make sure they know Asia. That's big picture number one. You know, the 19th century was the century of the UK, the 20th century was the century of the US, the 21st century is going to be the century of China, whether we like it or not. Doesn't mean there won't be problems along the way. I was once quoted as saying in 1807, if you were smart, you moved to London. 1907, you moved to New York. 2007, you moved to Asia. I moved to Asia in 2007. I hoped I was right.
Right.
No. Asia, maybe it's not specifically China, but there are enormous opportunities. The largest creditor nations in the world are China, Korea, Japan, Hong Kong, Taiwan, Singapore. I mean, this is where the assets are. This is where the drive and ambition, the education is. It's certainly not in the West anymore. You know that the largest debtor nations in the world, you know who they are, and they're all getting worse. The Greek problem's been going on for 5 years. Austerity, the debts are higher now than they were 5 years. You know, where's the austerity? They all complain about it, but nothing has happened. Their pension plans are still much more than even other people in the EU, and they're complaining that they cannot do what they have to do. So we have gigantic transitions taking place to Asia. I am convinced that when we have our next economic problem, and by the way, we will. We've had economic setbacks in the U.S. every 4 to 7 years since the beginning of time. Everybody has economic setbacks. The next one's going to be worse because, you know, the debt keeps going higher and higher and higher. And so far, we've come out of these periods of hardship okay, but every time we come out with higher debt. That cannot continue till the end of time. So I had rather be with the creditors, Asia, than with the debtors the next time we have the problems. And we're going to have more problems. Let's say the debtors get through the next problem. Let's say there's a gigantic collapse in 2016. You pick the year, whatever. It's going to happen, whatever the year is. Let's say that somehow the world has a horrible collapse. Somehow we come out and we have another long period of okay, then things are okay. The one after that, we're not going to come out of. That's going to be the big nightmare. The next one may be the nightmare, but certainly the one after that. So we're going to have more economic problems. We always do. I mean, it may sound strange, but what would be strange if we didn't have periods of economic duress and collapse? That would be very strange. And the next ones are going to be worse than in the past. And I would urge you to know about the creditors, know about agriculture, because agriculture is going to survive if you can find the right places. Many other things will survive too, I assure you. But it's been over 5 years since the United States has had even a 10% correction in the stock market. I mean, that's more or less an accurate statement. Maybe it's 4 years and 9 months, whatever it is. It's been a long time since we've even had a 10% correction. So these are not normal times. And when the problems come back, which they will, be prepared. I hope everybody's worried. I'm certainly worried. It doesn't mean I'm prepared properly. It doesn't mean I'm going to survive. But I certainly do hope I can figure it out. The places where I've been putting money in recent months are Russia, China, Japan, Zimbabwe, places which have been depressed. Even at the top in China recently, the market was still down, 30% from its all-time high. It's not as though we're talking about market. I mean, the United States stock market's at an all-time high. Doesn't mean that you're safe buying things that are depressed, but at least these markets where I have been investing recently are down. Doesn't mean they can't go down a lot more. I would not put any money in bonds. Bonds have been going up since they stopped going up 2012. After they started going, they hit bottom in 1981. We're going up for over 30 years. Doesn't mean they're not going to keep going up, but if there's a bubble in the world, it's the bond market, the government bond market. And if and when people start losing confidence in government bonds, that's not going to be pretty, and that's when we're all going to really be scrambling and hoping to survive.
And wishing we had a farm.
And wish we had a farm. Yeah, wish we did know how to farm. I wish I could go take an agriculture course, get a farming degree. But I suspect even if I had a farming degree, I wouldn't be any good at farming. But so the world's going to have. But that's one of the great things about the world. It's always having these dramatic changes, and which present. The Chinese have this saying, yin and yang, that crisis and opportunity are the same coin, just the separate sides of the same coin. So I hope that I survive the next crisis and turn it into an opportunity. I don't know, but I will say, back to what your general theme has been, whatever the opportunity is, it's probably not what people are thinking about. It's going to be something that they're not thinking about. Like you said about the guys who can go to the fifth dimension, that's where the opportunities are going to be. It's not going to be what you see on TV. It's not going to be what you see on Google. It's going to be the things that you have to think through and think ahead. And if you figure out a way to put that in a bottle, tell me, because we can we can start a bottling company and make a lot of money.
You got it. Jim, that's the perfect place to end it. I thank you so much for your time and for inviting me to your home. It's been a real treat for me. Thank you.
It's been my pleasure. Thank you, Grant. You're good at this. You should do more of it.
Thanks.